It's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning Live on Channels Television. Great to have you join us. I'm Ladi Williams. First off, let's take a look at what's happening in the news. Now, bread makers across the country have raised the price of the product between 10 to 20%, blaming the increase on high cost of essential production ingredients. This comes after some of the major bakers resumed from a 4-day strike, which they embarked on last Thursday to demand government intervention around the prices of materials used for the product. According to the president of Premium Bread Makers Association of Nigeria, Mr. Emmanuel Nora, the price of the commodity is now up by 10%. At the same time, the Association of Master Bakers and Caterers of Nigeria said they resumed their production yesterday after weeks of strike, but the prices of bread will increase by 20%. Meanwhile, the bakers are asking government to assist by reducing prices of yeast, sugar, flour being imported into the country and allow their members to obtain the license to import the commodities. And oil prices rose today for a second day on increasing concerns about tightening European supply after Russia, key oil and natural gas supplier to the region, cut gas supply through a major pipeline. Brent crude futures for September settlement rose $1.51 to $106.66 a barrel, extending a 1.9% gain. That was from Monday. U.S. West Texas Intermediate crude rose about $1.36. to $98.04 a barrel, having gained about 2.1%. Russia tightened its gas squeeze on Europe on Monday as Gazprom said supplies through the Nord Stream 1 pipeline to Germany would drop to just 20% of capacity. And the Abdul Samad Rabiu Africa Initiative, which is the brainchild of industrialist, philanthropist, and founder of Boa Group's Abdul Samad Rabiu, has awarded a $3 million development initiative to Niger Republic from its ASR Africa Fund for Social Development and Renewal. The donation was announced at the State House in Niamey over the weekend when the president of Niger Republic, Mohamed Bazoum, hosted the chairman of Boa Group, and ASR Africa, Abdul Samad Rabiu. Do take a listen.
This is a relationship that has existed for a very long time, and I'm really pleased and glad to be here, to come and visit with my brother and others that are here in Niger Republic. We have an excellent relationship, and we are at home here. His Excellency President Bazoum has been a family friend, a close family friend for many, many years. So it is an honor and privilege, and a privilege for me to be here in Niamey and to be received by His Excellency. And I want to use this opportunity to thank His Excellency for the warm reception, for the hospitality accorded to us, and the warmth and the love, the friendship that we have received. I really sincerely thank His Excellency and all his colleagues from the bottom of my heart. And we believe this is a relationship that has existed and will continue to exist for a very long time, Your Excellency. Thank you so much, Your Excellency, for having us. Thank you.
Thank you. And we see commodity prices quite volatile. We see oil moving up and down for the past few days now, and we're seeing the price up after it dropped yesterday. And we're also seeing grain prices also rise, at this time because we've seen that Russia did not hold on to their own end of the bargain, talking about allowing grains actually flow to countries that actually need it at this point. Well, now for Commodities Market Update, we have Olumayowa Ige, Analyst Financial Derivatives Company, join us right here in the studio. Great to have you.
Hello, Ladi. Thank you for having me.
Yeah, so the volatility continues in the oil market, and we're seeing it at $106. I was thinking it's going to stay below, $100 for a while with demand concerns and, with the Fed planning to raise rates even higher. What are you seeing in that market?
Well, the increase we've currently seen is also as a result of the slight weakening in the U.S. dollar, right? We know that when the U.S. dollar is weak, we see more countries are able to purchase commodities, countries with other currencies are able to purchase commodities. This is because commodities are oftentimes, like oil, are US denominated, right? And so this is what we saw, this is what happened, and this is what led to the slight increase in the price of oil that we saw, I think, over the past one day. And also the US equities market was stronger, and also this also played a part in the price of oil. But in the long term, there's still the concern of Fed increasing their rates. We know that when the Fed increases their rates, it's possible that we should see a slowdown in economic activities, and then this would most likely affect demand for oil.
But at the same time, we're seeing, supply concerns, also playing, a part, talking about the prices there. But how do you think the price is going to fare, going forward at this point?
I think that the prices might still be a bit volatile, right? Also because, yes, you mentioned supply fares. We have OPEC, but we know that OPEC controls a majority of production, at least the OPEC producing nations. We know Biden is, I think, is scheduled to meet the president of Saudi Arabia to discuss increasing their production output.
Oh, is meeting him again, or
I think he's supposed to. Okay, then yeah. I think he's supposed to meet him for that. But then there's still fears as to capacity, right? OPEC controls the quota for all of these companies. I know OPEC is meeting August 3rd, right? But they already have set quotas for August. They increased by about 400 or 600 million barrels per day for countries. So this is already in place. But I think that we're still going to see a bit of that volatility if the Fed's rate increase hike would most likely, it should slow down inflation, and then maybe this is when, but when that happens, the US dollar would actually be stronger. Right. And a stronger US dollar would also affect oil prices, and so maybe it might decline a bit.
And we actually need to see oil prices, down at this time, and we know Joe Biden has been doing all he can, to bring, those prices down, but it seems it's not working.
Well, when you put it, inflation is you can only try. There are still other factors involved. Biden doesn't control the supply of all the world. You have different countries, right? And then we have China, for instance. We have the lockdowns in China. That's also sparking fear because their imports in June declined to the levels of 2018 or so. And so that's a cause of concern, right? And then you also have Libya. Libya is planning to increase supply. You have all of these things that Biden doesn't necessarily control. And then you have the Russia-Ukraine war still playing its own part. So yes, he will try his best, but there are also other factors at play that we only hope that all these measures begin to show results in the coming months.
And all these other headwinds don't look like they're abating anytime soon. The war is still raging on, strong. And the inflation is still rising at this point. Energy prices still going up, even though we're done with the first half of the year. But looking at PMS here in Nigeria, we're selling between 170 naira and maybe 180 in some parts. How are you seeing this impacting commodity prices?
Well, definitely we're going to see that in our inflation. We should definitely see that in our inflation figures for the end of the month. Already we saw June inflation figures rise to 18.6, and one of the drivers for that was actually petrol, diesel prices, and then the Naira devaluation. Those were major drivers of the inflation figures for the previous month. And so with these prices, we are seeing 170. I think with these prices, 170 in Lagos, higher in other parts of the country, and this is also because of distance, right? It will reflect in the prices. And so definitely that's still going to feed in to the cost of commodities. We bring food from the north, from the inner states, and they come to Lagos. All these things also feed into the prices. And so we're going to see more price increases in the coming month and coming months if and I don't even see this actually changing. So definitely we'll see the impact on inflation in the coming months.
And, looking at, all these energy costs, rising in Nigeria now, what do you think, can be a short-term solution, to create some kind of buffer for, producers and, the manufacturers at this point?
At this point, you would think that the buffer would be more forex, right? For instance, we know that manufacturers have been complaining that they only get about 5% from the CBN, right? And so they've had to source most of their forex from the BDCs, from the parallel market, different sources. And so this is reflecting in the costs of commodities. So you might actually think, oh, CBN should increase their supply of forex, yeah. FX. But then this year we're looking at it. I don't think we've gotten any remittances from the NNPC to the CBN this year, and so the CBN too is having that issue, right? They haven't had an auction with the banks this year, or in the past 1 month rather, I think, and so we're seeing it affect PTAs and definitely manufacturing sector. But the short term. For all prices, I think the federal government is already trying their best with the subsidy. I think that's the best that they're actually doing at this particular point. That
subsidy is gulping too much of our revenue at this point.
Too much of revenue or debt. And
yeah, we were seeing debt actually debt servicing, rise more than revenue we're getting in the country. All right, now let's look at FX, as you talked about before. You see it's broken that 660 Naira psychological point. How are you seeing it?
Well, it's should we say it's almost a mess a bit, because when you talk to the BDCs, they are equally frustrated, right? They're equally frustrated. There's an arbitrage going on, the price differentiation.
And it's getting really wide.
It's getting really wide, and the reason is because there's no anchor price. They're not getting from the CBN anymore. So you have a situation where this person gets from this source at 620, he sells at 630 and thinks he has made a spread, and then he hears that they're now selling at 640, that kind of thing. And that's happening a lot now, and that volatility is really based on the fact that there's no exchange, there's no anchor price. Even in developed nations, we know that there are exchanges where in the parallel market that the prices are more or less determined, and so from that price, other BDCs of the sort come up with their buying and selling prices, but we're not having that here, and that's causing a lot of volatility. And also back to when we look at the excess demand, there's a lot of demand being pushed to the parallel market, and there also will be constraint for the supply constraint, and so that's also impacting the price that we see currently.
And talking about demand, do you see that tapering going forward at this point?
No, not in the short term, because we are a heavily import-dependent nation, right? And so our manufacturers need the dollar for manufacturing to import raw materials. Everyone needs dollar. And then, surprisingly, this is a summer period, right? As much as we say the economy is a bit shaky, people are still going for their summer vacations, and so there's increased demand for the dollar. And also we're starting another school season. September is resumption season for schools abroad. Children are still going to go to school. They will need foreign exchange, and so in this particular period there's increased demand, and so in the short term I think that we might still see a bit of that. And
all of this is also playing into the price of bread. I talked about how the bread makers have called off their strike. They've hiked the price by about 10, and 20%. How do you see consumers reacting to this price hike?
So for consumers, we would most likely see a shift to other commodities. But then also when you look at inflation and look at other commodities, the prices are also increasing. They're also rising. So some people would actually have to reduce the quantity of which they consume currently. But then let's look at the bright side with the Russia-Ukraine deal that we hope would reduce the price of wheat. Maybe that decline in price of wheat will reflect in prices, and then maybe it would help reduce the cost of bread manufacturers because they import their flour, their wheat flour. But also then there's also the Naira devaluation. Right.
And sugar is also playing into this cost.
Sugar is playing into the cost. And then if we break it down, actually, we look at eggs, we look at diesel. All of these things come up in the price of bread. But then if we're having a decline in one aspect of production, wheat, might actually help in the short term. But then we're going into planting season harvest season pretty soon. And so we're having the likes of new yam. And so let's hope that would actually, that should reduce the prices of commodities like yam and all, and so we'll see a substitute, people shifting to a substitute. We might see more of that because we have a decline in prices, or a bit of a decline in prices of other commodities.
And talking about wheat prices now, do you think there's hope, for Ukraine to get, much of those grains, out of their ports at this time? Because we've seen, Russia actually kind of change the game when it comes to that agreement.
Well, according to Russia, they say they didn't change the game, that it's not affecting Ukrainian ports, right? But then the thing is, how many shipping companies will be willing to go into that part of the world to export grain? It's not secure for them. So the Ukraine will have to find ways of increasing their shipping capacity to bring their grains out of the ports. But at the moment, there's a bit of hope, but with what happened with the Odessa strike, it calls into question. It's possible that the United Nations meets with them again and then they come up with another sort of agreement that, we've come up with this agreement, you need to stay away from this area. It's possible that that happens, since they were able to sit down in the first place to come up with this treaty that's valid for about 120 days.
And we see commodity traders still, profiting from all the volatility that's happening, in most of this market. Anyway, the NLC is commencing nationwide protests, solidarity with ASU, Shanu, and NASU. What can we expect from that?
Well, it's a warning strike,
right.
First of all. A warning strike is still better than a riot, right? The government has come up with the different promises, right? But we know that promises are different from policies, right? Promises do not have any backing of action. Policies are the ones that come up with actions that will produce the results that people need. When we look at it, the students have been home for too long. Right, and then their parents are the NLC, everybody being involved. They also have children part of this strike. So there's a concern. So we hope that this strike will actually cause the government to move from the part of promises to actual policies and come up with actions that would actually produce the results that the people actually desire and need.
All right, so what's happening with the other agricultural commodities now?
Well, we've seen, like I said, new yam is out. We've seen yam prices decline from about 2,000 to 1,800. We still see prices of beans going up, rice going up. But then like I said, we're going into Q3, harvest season. And so we hope that we will see a bit of that. But then insecurity is still a major part. We hope that the harvests are actually sizable enough to meet the supply of the harvest, is sizable to meet the demand. And so hopefully we can actually see the decline in prices that we actually need to see.
Because it seems like it almost seems impossible that we might actually see these prices actually come down, or do they just stay there or something?
They wouldn't just stay there. I mean, if we pick yam, for example,
we're seeing all these headwinds actually
disappear. We would definitely see. Now, the price decline that we will see might not be as much as we hope to see from previous years, but we should see a bit of a decline in the prices in the coming quarter.
Right, and yesterday the stock market actually opened quite down, about 1.11%, with a loss about 55 million from the market cap. How are you seeing that market?
It started about some days before now, right? And then when we look at it, there are reasons for it. The inflation figures came out. It was higher. The investors will be cautious, right? We were looking forward to the MPC meeting. It came out.
Because I was thinking at some point that the inflation figures don't really matter to investors here.
Well, it matters because they look at it. The inflation figures would kind of determine what the MPC meeting the outcome of the MPC meeting, what the MPC rate would be, right? And so we saw the increase. Like what's happening in the US and Nigeria has started, we saw an increase in interest rates by about 100 basis points, right? And so when that happens, when you anticipate an increase in interest rates, people are cautious. They're waiting to move into the fixed income space because there's been an increase in interest rates. But what we've seen after the MPC, for instance, is that we didn't really see much of a difference in the fixed income space. It was only, I think, the 364-day interest that increased slightly. That was what we saw. We didn't see an impact on the 91-day and 160-day results. But then that is one. And also, let's not forget that H1 is running up. We're anticipating results of companies in the coming quarter. And then, like we said, all these issues of Naira devaluation, inflation, it will most likely impact the bottom line of these companies. So investors are also cautious. But then when we look at what happened, for instance, yesterday, we saw that there was a huge decline in daily turnover, about 17.9% or so. And then also looking at the companies, how the companies, what happened to the companies there, we saw a lot of some penny stocks gain, but then the bellwether stocks, when we look at them, we had MTN, I think had a decline from 230 to about 2, yes, yeah. to 130.
Was a big drop.
It was a big drop, right? And that
impacted
the market, which is why we saw that the decline for yesterday was was larger than the decline that we've seen in previous days.
All right, we'll leave it there now. Well, the central bank governor said that they will continue to hike, as much as is needed. So equity markets are going to have a lot to deal with at this point. Thank you so much, Maiwa Ege, financial analyst at Financial Derivatives Company. It was great having you.
Thank you for having me.
All right, now, so after the break, we'll take a look at Nigeria's supply chain as inflation bites. That's in a moment. Just stay with us. This is Business Morning. All right, now to our next conversation. The global economy is grappling with the highest inflation in decades, with extensive inflation in the supply chain affecting companies worldwide. Supply chain disruptions undoubtedly have contributed to the rise in inflation as extensive delays and skyrocketing costs continue to plague the industry. Let's talk to Debayo Adeleke, founder, Supply Chain Africa. Join us right there via Zoom. Great to have you.
Good morning, Ladi.
Good morning.
It's 4:30 at my location, so bear with me with my makeshift video.
I can imagine.
And let's get to it.
Thank you. So inflation is impacting global economies, at this time. How is it impacting supply chain, in Nigeria? Because some would say it's supply chain issues that are stoking inflation.
Absolutely. I think the global economy is trying to kind of grapple the situation right now. But it's actually, we expected this. We expected this actually from the U.S. perspective, with all the money pumped into the system, the infrastructure bill, the COVID bill, and most of the countries around the world pump so much money into the system. So at some point, there will be, most of the causes of inflation is too much of their money in the market, and so the government has to figure out a way to mop up that money within the system once the demand and supply kind of stabilizes over the course of time. So one of the things that we are seeing right now that the government is using the tool is the interest rate to kind of mop up. But Nigeria's situation is quite different because prior to COVID-19, Nigeria has been grappling with inflation, and most of these things has to do with the economic, philosophy, and oftentimes the economic situation of the country. So Nigeria has a compounded inflationary issues. I think we also already way into the double digits last time I checked. And I don't think anything is going to happen in the nearest future now with the political season coming up and all insecurity that is plaguing most of the supply chains in the country. So I don't see this thing relenting until we have a different government in place and we have a different economic perspective, because this current economic perspective has kind of have a terminal hand at some point once the new government comes in next year. But depending on whoever the new government is will determine what kind of trajectory the economy is going to go further. But as it seems right now, we're going to continue to see the fall in dollar. And so Nigeria is really going through a lot.
That's really in the Naira.
A lot. And what do you say?
Yeah. No, I said the fall in the Naira.
Absolutely. The fall in the Naira is really affecting most of the commodities across the board. And I really do feel for a lot of folks that are actually trading commodities because it's not been fair to them. And unfortunately, I'm not a prophet of doom. I can tell you it's going to get worse before it gets better. So with the global economy, which Nigeria is quite nested in it, he's also having some community issues right now. At least since I was born, the U.S. hasn't seen this kind of inflationary rate. And until things stabilizes, until we have some kind of concession in the Russia and Ukraine prices, until some of these dollars has been mopped off the market and some of these contracts that have been for infrastructure bill in the U.S. has been executed, I don't see any of these things coming down.
That's a lot of dollars that needs to be mopped up, at this time. But in what ways can procurement leaders, address, high inflation and alleviate associated pressures?
It's too late to be given any tips on that right now, Ladi, because oftentimes this is supposed to have been done prior. When you hedge, one of the things we've done, one of the things that we know as procurement specialists, especially beyond supply chain, is to be able to hedge against inflation. And one of the things you do hedge against inflation has a cost to it as well, is to kind of, put in, if you're actually having on contracts, you'll be able to kind of put those kind of inflationary rates into your contract in such a way and in such a manner that there's any increase in commodity, those things can actually, your contract is flexible in that sense. And also, you also have to store, to hedge against inflation. But the thing about storing against inflation is the fact that you don't know how long this inflation is going to take. So in a sense of storage, in the sense of increasing your inventory to hedge against inflation, there is also an inventory holding cost that comes with it as well. So that could be, so you have to look at it, okay, what are the percentage of inflation and what I'm trying to hedge against, and also how much of the inventory holding cost, and you balance all those percentages and see if you come out in the positive or the negative side. So those are the two major ones. But as you see right now, is to continue to kind of not to hold back, especially for procurement specialists or procurement professionals, is not to buy too much material and try to just do as much as necessary to kind of make your organization stay afloat, because you don't want to buy too much right now and then inflation comes down and then you have a lot of product in price that you have to make up with it, which over time you're going to take a lot of loss. You're going to take a lot of losses on your books. So those are the 2 or 3 tips I can offer procurement professionals at this particular point in time. Especially, it's too late to be hedging against inflation right now.
Too late
to hedge. In the US, some of them can get ahead of time. They can hedge against inflation, but we're already in the midst of inflation. The best we could do is to reduce the amount of a lot of product that we are buying, and more importantly, is to actually kind of see and kind of put those inflationary rates in our contract as we buy a lot of these commodities in such a way that any fluctuation in prices doesn't affect you as well. Because oftentimes some people are locked in some prices and they won't be able to deliver because of inflationary rates.
Right. And another issue is getting the raw materials here. What are the alternatives for companies struggling with high costs of getting some of these raw materials?
Yeah, it's and let's use Nigeria as a prime example. Nigeria is an isolated example right now because of insecurity in itself, and that is going to be huge. Price of getting raw material is going to be quadrupling, and obviously there are certain things that you can do. This particular one, you do your best to first of all, you have to actually get this material safely first. The price of getting material, especially in Nigeria, from what I checked last, has quadrupled over the course of time. 70% of the cost of every commodity that are coming out of any nation, I think Nigeria is even probably actually much, is about 80% of cost of every commodity is attributed to logistic cost. And that is huge, especially in this kind of era. So Nigeria zoned, logistical cost of a price is 80%. And this can be attributed to, inflationary rates, insecurity, high security. And I think high security has attributed to 5% increase as well. So I will always encourage people in this particular situation right now, to source locally to the best of your ability, so that you can reduce the amount of cost. For the most part, it's not going to be that much, but at least you have sustaining ability to have to sustain, product going through your pipeline rather than having to wait. And oftentimes the waiting can come in. Did you know how much companies have suffered a lot because they couldn't get a lot of product into their pipelines to produce their rubber material? So a lot of people are now going to nearshoring because getting produce has been quite difficult. We have Russian war going on. We have sub-Sahara insecurity, U.S., whatever is going on in the world, Asia, the new rule, all these trading embargoes and all these sanctions.
Quite a number of headwinds there. Quite a number of headwinds.
So there's so much going on in the world. So the best way you can do, and unfortunately, they're kind of, we're kind of becoming a pariah economy. A lot of people are more into regionalization right now. What we know as globalization is now coming into what we call regionalization. So that's why Africa Continental Free Trade Agreement is coming at the right time for Africa to start trading with each other, to be able to at least some.
How is that going? How is that going at this time?
At least from my forecastle to yours, there's a lot of traction. There's a lot of policy has to be made. When you have, the Africa Free Trade Agreement, as we know, is supposed to be the largest trading bloc in the world. Supposed to take, the likes of the former NAFTA and EUs and whatnot. But for that to actually be executed, we need a particular, a platform, just like we have in the EU and in the US as well, a stronger platform to be able to adjudicate a lot of these issues that's going to come along the way. And I've yet to see that one out of African Union. I've been working with a lot of all these governmental parastatals, all these parastatals across African countries that are going to be working on this. And I think until we see a clear function, a clear picture of how this is going to look, it's going to be very hard to predict how this thing is going to go. For what we've seen on paper so far and how the trade is going to go, and I think is quite promising. But it's a lot to have 50 plus countries in Africa with different ideologies, different political ideologies, very economical ideologies. We're colonized by different nations
and currencies too.
Africa, and how these things to be able to transpire. So it's going to be very interesting from my perspective. But at least so far so good on the policy end. We just need a body that's going to control all this, because without a body, it's going to be very difficult. Because imagine Nigeria saying, you know what, I'm going to just do my own thing. How does that affect other countries that are passing through goods and services, that are using Nigeria as a pass-through for their movement of goods and services? Because we have a lot of landlocked countries in Africa where they have to use some kind of port, especially in Nigeria, to pass through those things. So all these things have to be fine-tuned and has to
so much to actually factor in, and also currency issues too, for the bloc. But some professionals have talked, that said organizations, responding to high inflation by actually increasing their supply chain resilience. And I'm wondering, how do you do that?
So when you increase your supply chain resilience, so resiliency and risk management are two-sided coin. So for you to understand supply chain resiliency and supply chain risk management, you have to have one in the boat. So for you to understand supply chain risk management, so when you understand resilience, you have to understand your supply chain risk management. So let me kind of answer that question from the perspective of supply chain risk management. So when you talk about resiliency, you can only be resilient if you can actually manage your risk. So what they're actually referring to is increasing supply chain resiliency into understanding what your risk factors are. So over the time, supply chain, and this is my area of specialization, so I can talk all day on this. So When you're talking about supply chain risk management, it is about understanding the risk, understanding the probability and the impact of those risks on it. So in this part of the situation, as we continue to see, a lot of things that we don't see as risks over the course of time, really traditional risk factoring in different businesses have changed over the course of time. A tweet from a customer these days can be a huge risk within your business. So understanding this, and for you to understand the risk, you have to understand the vulnerability within your supply chains. And that is what a lot of people are actually talking about when they're saying increasing those kind of supply chain resiliency, is understanding those vulnerabilities. You understand those vulnerabilities, then you can prepare ahead of it. So for example, this issue of when we went through COVID, we knew ahead of time inflation is coming, recession is coming along the way. So what do we do when we're able to have the visibility across different supply chains, either local or global? We'll be able to hedge against those risks. And that's what they mean by having a supply chain resilience, is by looking at those vulnerabilities and those critical points along your supply chain. And that has been very difficult over the course of time. So with the use of technology, you can actually have a clear view across your supply chain. You know who is supporting who and on the line. You know who are the touch points. What are the touch points along your supply chain? Who is touching my supply chain at any given point? And then you can actually look at those vulnerabilities and plug those vulnerabilities in as necessary. So by doing that, you are actually increasing your supply chain resiliency. So you can actually match, but you might not be able to understand the risk to a large extent, but at least the supply, and let me make this statement before I close out on this point. What we saw about COVID is this, because a lot of people do not have supply chain resiliency. A lot of supply chains were broken. So when you actually understand supply chain resiliency and you're able to block those vulnerabilities, you might not be able to do it to a large extent. You might not know all the necessary risks involved. But what is going to happen is whatever is coming is going to stretch your supply chain, but it's not going to break it. And it's easier for you to contract your supply chain than to actually start sewing up together if it's broken.
Right. All right. All right, Adeboye Adeleke, we'll have to leave it there now. So much to unpack there. Adeboye Adeleke is the founder, Supply Chain Africa. It was great having your perspective on the show today.
Thank you so much, Ladi. It's been a pleasure.
Thank you. All right, now let's head on to the markets. We have Ini right there with the details. Ini, it didn't look so good yesterday.
No, it didn't look good at all, Ladi. The bearish sentiment continued all the way from last week, and as you discussed with Maiwa earlier, the fall yesterday was even more than 1%. We see there, and well, I guess everything comes together and meets, and yet, because as Maiwa was saying, she was talking about seeing people move from the equities to the fixed income space because of the yields. Yields there having gone up only by 1%, from 14%. It was in a very long time to 15%. Yet we don't see a lot of activities there. Maybe we're waiting for it to catch up. A lot of analysts there have said that we would see that when FAC comes in, but I guess we'll always have to wait for that liquidity. Let's see a little bit of details there from the market. The market was down more than 1% yesterday, and we see that the month-to-date loss settled at minus 0.8% yesterday, while the year-to-date return moderated to plus 20.3%. And then we keep seeing that fall in the all-share index from 52.50 to 51,900 and now 51,400 there. Not looking very good. We saw there was a total decrease, of course, in volume. In volume, there was increase of over 50%, but because it closed really low the previous day, then we did not have a lot. UBA was the most traded volume by stock by volume, while Airtel Africa. And of course, the MTN Nigeria yesterday was one pusher or driver of the market yesterday. A lot of sell pressure on that stock yesterday is what drove the market. But we have Phil and Igwe now joining us to help us understand some of the other details in the market yesterday. Of course, equity cap is down there, 27 trillion. Phil, good morning. The market it doesn't seem to be clawing out of this red zone.
Yeah, thank you very much, Ini, for having me in the program. We think that the market is currently facing a bearish patch, right? As you rightly said, the telecoms giant MTN was a key drag on market performance. We also saw weaknesses in Transcorp. I think during the day intraday, there were weaknesses in WAPCO, but it managed to close the day positive, and then there were weaknesses in LBNH and UBA. Now, overall, we just think that these are a reflection of concerns around expectations of higher interest rates, possible concerns around electioneering activities are expected to heat up as time goes on, and overall risk-off sentiments across the globe. However, we think that once these companies begin to declare results and declare interim dividends, you may see some tactical positioning in these companies. So there's still a likelihood that there will be some green patch, right, amidst this whole sell-off, particularly when the results begin to trickle in and when we begin to see interim dividend declarations. So that may sort of arrest the bearish sentiments that we are seeing at the moment.
All right, but I mean, major or general expectation is that when we see the equities in the red like this, then the fixed income will at least be getting some activities. Doesn't seem that way. So where are they going to? Where are the investors?
Well, once you're seeing this kind of bearishness, global bearishness, there are likely to be a shift in attention to some short-dated instruments like maybe placement, commercial paper, just in chase of better, higher yields, right? Especially when there's risk-off sentiments in the market, as we are seeing now. But like I said, the coming results declaration and possible interim dividends may actually generate some positive activities in the coming days. So we're still expecting earnings. And for some companies, they're likely to perform relatively well again in Q2 and declare interim dividends that we expect to be better than what they did last year. So we think that there's scope for some recovery around those earnings. But going into Q4, market may be weak again because of the elections. But then these volatilities present entry opportunities for savvy investors and traders. So it's normal that the market is volatile. It just provides opportunity to enter and maybe cash out in the future.
Yeah, well, I wonder how many investors are entering at this time. We always say buy the dip, but maybe Ladi has entered, is one of those. Well, thank you so much, Phil. Thank you so much for your perspective. And happy trading day today.
Yeah, thank you so much.
And you know, it's a problem when you don't have money to actually buy these dips, and you know,
it's a tough time. On every side.
Yeah, you're squeezed on every side. So you're like, where am I going to get the money to buy the dip at this point? All right, Annie, thank you so much for the update. All right, now let's after the break, we'll head to London. That's the moment. Just stay with us. Welcome back. Let's head on to London now. We have Juliana standing by right there. Great to have you, Juliana. Good morning. So Heathrow Airport and EasyJet, they've been affected heavily by what's happening, you know, with flights there, and they've revealed large financial hits here. How are the numbers looking?
Good morning, Ladi. That's absolutely right. We've had really disappointing figures from two of the airline sector's biggest players, as you say, Heathrow Airport and EasyJet. We actually had pretty good numbers from Ryanair, which is Europe's largest airline, the first time that they reported a profit in the first quarter. But alas, that's not been the way for Heathrow and EasyJet. EasyJet, in the 3 months to June, have reported that they lost £133 million. And this is despite carrying 7 times more passengers than they did this time last year, and it is because of what we've been seeing on the airways over the past couple of weeks. Some massive queues, last-minute cancellations, and a shortage of staff. And now EasyJet are blaming airports. They're saying that they had up to a year to get themselves in gear, ready for the demand, particularly at Easter, where so many families, for the first time in 2 years, were willing to risk a COVID infection abroad and decide to travel. But there just wasn't enough staff at airports. So that's something that Heathrow will have to tackle, but they have put a little bit of a positive spin on the story, saying that they are looking at numbers for summer, and they do look very good. Now, back to Heathrow, they reported a first-year loss of £463 million. And again, it's a similar story to what we're hearing from EasyJet. They had to do that mandatory cut at the beginning of the month, telling all airlines, those that particularly come out of Terminals 2 and Terminals 3, to cut 10% of their passengers so that they could equip themselves for the demand. So it's not looked good for them. But again, they say that the summer months look good. So fingers crossed there'll be no cancellations so people can get away and find, I would say, some sun, but perhaps not some sun, but definitely a getaway from London.
Definitely not some sun at this point. But MPs are warning that millions of people will be plunged into unmanageable debt this winter unless the government comes up with more support, for those struggling to pay their energy bills. Well, what kind of support are they talking about?
Well, just more of what we've had. It's going to be a really difficult winter for millions of families up and down the country. Not only inflation, which is currently at 9.4%, it's projected to rise by 11%. Much of that rise is due to the energy price cap. It's currently sitting at about £2,000. That's looking to rise to about £3,224. And now the influential Business Select Committee, which is a cross-group of MPs, they were meeting yesterday, and they said that the support that the former Chancellor Rishi Sunak gave was at a time when we didn't think the energy price cap was going to raise as high as it is. So it's currently at about £2,000. He gave £650, £324 was given to vulnerable households a couple of weeks ago. But they want the government now to do much more in the face of these issues. There was some politicking, shall we say, around the £650 grant that was given, because many of that money is going to be going to to wealthy pensioners. And if you're a wealthy pensioner, you don't need that money. So they're saying it should be distributed a lot more fairly, and that Ofgem, the energy regulator, should get involved and work with the government and perhaps swap out a price cap for some sort of social fund so it can get to the households who need it the most.
Yeah, households need a lot of support right now. All right, Juliana, thank you so much. See you at 1:30.
See you then.
All right, now let's head on to other markets. Now we see the crypto space still in the red this morning. We see it's extreme greed even further down at 26 points of 100. That's extreme fear in the market. And we see the market cap there sitting at $967.22 billion. That's down about 3.90%. Volume traded in the total crypto space this morning, $76.16 billion. That's up about 16.36%. Bitcoin dominance there sitting at 41.67 points. And we see price of Bitcoin there lost that 23,000 level, now at $21,091, down 0.38%. Volume traded in Bitcoin, we see that $36.93 billion. And let's look at Ethereum now, the king of the altcoins, $1,418, lost that $1,500 level, down 0.83%. Volume traded $19.59 billion. And we see it's mostly red on the top alts by market cap this morning, with BNB there trading at $242. That's the token for the Binance exchange there, down 0.53%. All right, let's bring in Olumide Additional now, financial market analyst. Hello, Olumide, good morning.
Hello, Ladi, good morning. Thanks for having me.
Yes, Olumide, and it's red again, and Bitcoin is looking quite weak today. What are you seeing?
Yes, Ladi, I think the right is setting in the crypto market again. You know fully well that in coming days, the U.S. Fed, known as United States Central Bank, is about to raise interest rate by 75 basis points, and that has really kept growing amount of investors on the sidelines, and we saw huge profit taking. In fact, if you look at on the day, about 74,000 crypto traders got liquidated because of long positions in the futures market. Also, the dynamics is that the U.S. Fed might still hamper on fighting inflation more aggressively. That also affected leading altcoin Ethereum, breaking the critical support level of $1,500. So it's really a bag of sell-offs today, Ladi.
Yeah, it's more sell-offs we're seeing. But, some traders are saying, the bottom, seems close. Some say the bottom is still far away from here. But how should that retail investor, be treating the market right now?
Yeah, Ladi, I share opposite views. When you see the U.S. Fed and other central banks fighting inflation aggressively with monetary tools, that tells you that they are trying to hamper down liquidity. And you know what liquidity does to risky assets. Also, secondly, you need to also understand the dynamic nature in the crypto market right now, where we've seen systemic players getting liquidated. There are rumors that some crypto exchanges do not have enough financial muscle to stand the test of time, and that's pretty much really affecting. So despite the growing adoption, despite the fact that Bitcoin was able to stand above $20,000, it's looking right now that it might fall below that again, as the dollar is coming up stronger this morning.
And Ethereum there lost that 1,500 range, even though, we've seen that whole hype about merge. What are you seeing with Ethereum?
Yeah, you rightly said, despite the rally we saw in Ethereum going as high as 1,600. Yeah, the positive sentiment still arises with Ethereum, but the problem is that investors classify it as risky assets. So when you see the dollar really rising up and you see liquidity crunch coming in, there's no how Ethereum might stand. But you could see that positively Ethereum has recovered faster than many crypto assets. But today's moderation tells you much that a lot of profit taking is. But if the merge really comes to play, I see Ethereum standing at least above the end of $1,000 this year. But it's very unlikely that we see the record high they had in 2021 playing out this year.
Right, and many traders that have been through, bear markets, they say it takes over 200 days, for a bear market to, take its course. And now we're around the 200, range at this point. But at the same time, traders are still very much afraid, in this market. What do you see happening towards the end of the year?
Yeah, like, for me, I think it's still going to be very bearish. Understanding what the Russians are playing, using energy as a weapon, it tells you that growing amount of investors, particularly in Europe, will focus on core services. They're trying to keep food and energy on the table. So the investments you see in risky assets will definitely moderate. And also the fact that Nigeria and other African countries are suffering from the wheat restriction by Ukraine's war amplifying also means that investors also focus more on core services. So I pretty much put the crypto market bearish this year until the US Fed claims inflation, until the Russian war with Ukraine is over. It seems like it's going to be more sell-offs in the market in the long term, Adi.
And we see, emerging economies, their currencies are, struggling, at this point. We see how much the Naira is trading for on the parallel exchange. How is crypto playing into, any of these currencies?
Well, what we've seen is that growing amounts of retail investors, particularly in Nigeria, are holding their funds in the stable coin. The stable coin is usually backed in US currency. So we've seen people that don't have exposure in the US fiat bank accounts in Nigeria using that for transaction. So we've seen it going as high in P2P as high as 650 to 660 naira. But having said that, I think concerns are that the CBN lacks liquidity based on the growing oil theft that is in play, and that pretty much might put the naira in 700 naira to $1 in the black market in play. But we hopefully believe that the president will interfere in these security lapses affecting our oil dynamics, because that's really what's going on in Nigerian currency right now. Because despite the fact that the US dollar seems to be moderating this week, we still see that the Naira is going opposite direction, telling you that the market is largely efficient. So we are hoping that Nigerians still have faith in the Naira despite the devaluation concerns, because pretty much major currencies are also suffering defeat against the US dollar.
Yeah, a lot of currencies are suffering at this point. All right, thank you so much, Olumide, additional financial market analyst. Always great having your perspective.
Thank you.
All right, now, so let's look at the top 5 gainers. We see it's a very lean Guinness list we have this morning there with OKB there up by 1.44%, QTerm that's up 0.81%. We see USDP and USDD, both stable coins. They're up, so it shows that traders are actually running into safe haven coins in the crypto market, talking about the stable coins. All right, that's it for the market, and that's a wrap on the program. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.